All right, we're recording. So thanks again for joining me this morning for the financial aid workshop for 2021. Just as a reminder, this is for your students starting in fall 22. Now, I realize there are people on the call who have younger students, and that's completely fine. But I always like to reiterate, when you're filling out your applications, you're applying for the fall of 22. And I've seen some people make a couple mistakes there, and then they had to start all over again because the years were off. So you're starting fall, when you're filling out the applications this year, it's for the fall of 22. We're doing this a year in advance. So let me just go to screen share here. All right. Okay. So just to kind of get started with some language and vocabulary, you'll see this stuff a lot in the coming months, and especially when your student gets their financial aid award letter. And also when you're doing research, these are things to pay attention to. Cost of attendance includes full cost of a university, a college or university. That includes tuition, fees, room and board. And they kind of take an average of what a typical meal plan is and what a typical dorm costs. They also throw in a small budget for books, supplies, transportation, and living expenses. So when you see cost of attendance, which for your students who have with me their College Planner Pro account, when you are looking at a school's profile there, that's the cost of attendance. So that's the big number. Now it gets confusing. I think I've got all West Coast people on this call today. So if you're looking at those Western undergraduate exchange schools, those WUI schools, it's important to note that those are tuition only prices listed, and that gets a little confusing. So those are tuition amounts. Whenever you see, a full tuition scholarship, that doesn't include the $15,000 to $20,000 in room and board, right? EFC is expected family contribution or estimated family contribution. And this is basically a calculation that comes from the federal government that is they use a formula to determine what your family's eligibility for need is based on what they believe, based on your financial figures, you can afford to pay for college. And I say that very lightly because the EFC is usually much more than people feel comfortable paying for anything. But it is a formula that gives colleges a figure, a number to go off of to determine how much money they think they should be able, they should give you, and how much your family has demonstrated need, or how much demonstrated need your family has, I should say. The basic formula then is the cost of attendance minus the EFC, and this is your eligibility for aid. And this is what we were looking for in that FAFSA forecaster. So how do you determine the cost of attendance and how do you determine EFC? Again, cost of attendance is that big number that includes tuition and room and board, as well as living expenses. That's going to be on your College Planner Pro profiles. You'll also see that on College Board if you're looking up colleges there. And then the EFC is calculated using a calculator like the FAFSA forecaster, and I will be showing you one other one that you can use. So let me just show you this screenshot here. And ping me if you can't see or hear me at any point during the presentation, by the way. So I did a FAFSA forecaster yesterday, just based on sort of a middle income family, family size of 3. I put income information, household income at like 95,000, very little assets, a little bit of savings, and a small 529 plan for the students' college savings fund. And so we get these figures here that look a little alarming. I put an average cost of $54,000, which is a good average for like a public school, like an out-of-state public school. If you're looking at private schools, that's going to be $65,000 to $73,000 a year. So when it asks you that in the FAFSA forecaster, obviously we don't know the college your student's attending yet, just put a good average. And I hope you put 0 for scholarships received, because none of your students should really have any scholarships yet, unless they're amazing and have already somehow, without me knowing, received some big scholarship. And then the total aid available, what they're defaulting to here, based on the income information I put, which makes me ineligible in this case, for Pell Grants, SEOG grants. So they're not eligible for, the income would be too high here at 95,000 for those grants. So what it's giving me here, this 6965 is a work study grant, a yearly work study grant. and the student loan, which for your first year is $5,500. That's the max that a student can receive in their name in a student loan their first year. So that's what you're seeing here, the 6965. That's federal aid. And so the difference it's telling me is 47,000. Well, gosh, who can afford that, right? So no, what I'm actually looking at is this number down here. Super unassuming, right? This tiny little figure down here is what's more important. This is your EFC, 18964. What is that? It's actually a dollar amount, but they don't put a dollar sign in front of it because they don't want to alarm you either that way, because it's not actually a bill. Obviously, we don't know what the colleges are actually going to award you, but this number is given to the colleges you apply to, and that's how they determine your eligibility for need and what they can afford to give you from their pockets. That's how they determine what they're going to give you in institutional aid. And that's super important. And I noticed that a lot of families are confused about this. They think, oh, we're not eligible for like a Pell Grant or a Perkins loan, so we're not going to apply for the FAFSA. We're not going to fill out the FAFSA. No. You can see here, based on my hypothetical family that's making $95,000, they're not eligible for much federal aid, but they're actually going to be eligible for a lot of institutional aid. And I'll tell you how that works. This 18,964 is called my estimated family contribution. So if I'm applying to a school that costs $74,000 a year, and that's a school that meets 100% of demonstrated need, and we'll talk more about those schools. There's a batch of colleges in the country that are committed to meeting 100% of demonstrated need. It's a very clean formula. So they're going to give me the remaining balance between in aid, and that could include loans, to be sure, but they're going to give me an aid package that makes up the difference between this 18,964, this 18,964, and that $74,000 in tuition and expenses. So that's huge, right? Then all of a sudden, oh, wow, that's something we can afford, right? Now, not every college, as you can imagine, can meet 100% of demonstrated need. Most schools can't. They might gap 20, 30%. And so you may very well pay more than that figure. And so that's why there's a lot of sort of emphasis when you're calculating the estimated family contribution. This is not your bill. This is not what you're going to pay. It could be more and it could be less. It probably won't be less. I'll just be honest. The way that you get less than this is if you get a big merit scholarship. That's the way you pay less than your EFC. Is if you get a big merit scholarship, an athletic scholarship, a talent scholarship like for music or art. That's how you get below your EFC. But for the purposes of today, what I really want to drive home is I want all of you to sort of like wrap your head around paying that figure and to talk about your comfort level as a family paying that figure. And then talk about how do we try to bring that figure down with merit scholarships and private scholarships. But it's a really dicey game relying exclusively, right, on merit scholarships. And it puts a lot of pressure on a student as well to sort of say like, the only way, you can go to college is with these merit scholarships. Much smarter way to approach this, I believe, is to build a list of colleges that have low tuition that brings it down closer to what your EFC is, or schools that meet 100% of demonstrated need that maybe have a high sticker price, but become affordable because your EFC is manageable. So does that kind of make sense in terms of how we use that number and how colleges use that number? Any questions just as at that point? Okay. All right. So there are three main types of aid that you'll see. Grants and scholarships, which don't need to be repaid. This is gift money. Grants are typically based on need, scholarships typically based on merit. Maybe they'll consider need as well. But there are a lot of scholarships out there. Like if a family is not eligible for need-based aid, there are a lot of scholarships that exclusively just look at merit. And I can help you all figure that out. Grants are typically need-based. Work study is a need-based grant. It's a federal grant that basically the student allows the student to earn money while they're going to college. Usually that's an on-campus job, and the money from the grant goes into that student's account to pay tuition and room and board, but they can use it for living expenses and books and things like that too. Sometimes there are off-campus jobs that universities partner with. Work study is basically the money comes from partially from the government, partially from the university, and that goes to the student. to pay their wages. Finally, loans. These can be taken out by the students or the parent, and this money obviously has to be paid back. There are loan forgiveness programs that I can share with you if you're interested for folks who work in education or the nonprofit sector. And there are multiple repayment plans, income-based repayment plans. And I'll show you, actually, there's a great calculator that you can sort of mess around with your student and help them figure out what their repayment plan would look like if they took out loans, which is a great sort of financial literacy activity. But for some loans, you know, you're going to be accruing interest. Well, for all the loans I'm going to be talking about today, you're going to be accruing interest. And the interest rates set by the federal government for these student loans are quite low, actually. They've certainly gone down in the years that I've done counseling. And there is a grace period on the repayment of those loans. There's also an option to go into deferment if the student goes to graduate school, or if there's sort of financial hardship during COVID. All the loans went into deferment, interest-free deferment period, which helped a lot of people. Sources of aid are federal, state, institutional, and private. And so the two applications that I'm going to be talking about today are necessary if you're trying to get need-based aid that's either federal or institutional. And sometimes state and private scholarships will also ask you to fill out a FAFSA to get an estimate of what your need eligibility is. But we're mostly going to be focusing on federal and institutional aid options today. So federal funds include grants, work study, and loans. So I already mentioned a couple of these. Grants do not need to be paid back. Work study is in the form of wages for the student who's working while in college, and then loans either directly to the student or to the parent. Now, these are the current interest rates on student and parent loans today. Now, these will be different when your son or daughter goes to school. You are locked in, so you get a new batch of loans every year. You do have to apply for financial aid every year because your income can obviously change. But let's say whatever loan you get freshman year is at a 3.73% interest rate, that will stay at that interest rate for the life of the loan. The next year it might go up to 5%, but that will stay that way for the life of the loan. And then there's some consolidation options later on. So the student loans are either subsidized or unsubsidized. Subsidized means that interest does not accrue while the student is in school. Unsubsidized means interest does accrue while the student is in school, but neither has to be repaid until the student graduates and after the grace period. And so those right now are 3.73% interest, and then loans that are given directly to the parents to pay for the cost of tuition, up to the full cost of attendance actually, are at 6.28%. Graduate and professional loans are at 5.28%. So what's important to know about those Parent Plus loans is you do have to fill out a FAFSA. So this is where I say, even if you aren't eligible for any of these grants or special need-based programs, loans are not based on need, except for the subsidized loan, which allows interest to not accrue while you're in school. Everything else is what we call an entitlement loan. You could be a millionaire and still qualify for these. So I sometimes will say, even if you don't think you need the money yet, why don't you fill out a FAFSA? Then at least you know you're eligible for these loans. And if something happens and you end up needing them, you've got access to them. So the process is you fill out the FAFSA, and I'll talk about that on the next slide. You'll fill out this application next month if you have a senior. And then once the student aid report comes through, you have to go in and apply for a parent loan, and they'll approve you for up to the full cost of attendance. And you might only qualify for part of that. So that's sort of a credit check situation. Those loans are non-transferable. So all of these loans are non-transferable. Student can't transfer their loan to a parent. Parent can't transfer their loan to the student. I always joke, even if your student ends up making more money than you after graduation, you can't transfer the loan to them. You can make them pay you back, but there's no actual transferring that can happen. And then interest that accrues on these loans is tax deductible. Make sure there's no questions. Okay. All right, state funds usually take the shape of like sort of a good neighbor tuition exchange program. So in the West, it's the WUI, the Western Undergraduate Exchange. I've got a handful of families in the Midwest and it's called something else. But essentially this is where a whole group of partner institutions agree that they're going to give a tuition discount to students coming from neighboring states. Not every school in the Western region participates, we know this, but those who do in the Western undergraduate exchange give a discount equal to 1.5 times what residents pay. So it's a nice discount. It's usually about a $10,000 savings a year. State merit scholarships are available as well. In Nevada, of course, you've got the Millennium, and then state-based grants. So in California, we've got the Cal need-based grant, which students can qualify for based on income, family income. So these are sort of the most common state options, but this bucket of funding is really sort of dwindling. There's not a lot here anymore. Where you get the most money is in institutional aid. And this is where I really emphasize putting a lot of thought into what the college list looks like. And sometimes I'll meet resistance with that. A lot of families think, let's just build a list of dream schools. And then as step 2, we'll find the funding to support that. And that's really backwards, because the most money you're going to get is from the schools themselves. So we really want to build a list of schools where we can either be quite sure you're going to get need-based aid from that school, or if you're not eligible for need-based aid, that it's an institution that awards merit aid. And the merit aid is a lot more subjective, and we'll talk about that in a minute. It's not as formulaic like need-based aid is. You can't quite calculate it as accurately, especially now that schools are test optional. A lot of schools used to have a matrix that was just GPA and test score, and it would tell you how much you were going to get. It's less predictable now. And we're seeing that with like WUI schools. They'll say on average, a student who gets the WUI award has a 3.9 GPA. And you sort of have to say, well, that's not a requirement. That's just an average. And so it's really tricky. It's an art, not a science, figuring out if a student is likely to get a scholarship. And then So institutions can give scholarships that might have need eligibility wrapped in, but typically those are first and foremost looking at merit, academic, athletic, or some kind of talent. So any of those could be considered. Need-based grants, and again, those are anything that's need-based can change year to year based on the family's income fluctuations. So I've seen students who first year of college, maybe a parent lost a job. This actually happened quite a bit during COVID. And so the student qualified for a bunch of aid, need-based aid, their freshman year. And then we did the calculations for sophomore, junior, senior years, and things changed because, parent A got another job. And so you will have to reapply every year. And it could be better or worse for you, depending on what your income does. And then there are some school loans as well. So in addition to the federal loans, there are schools that will that have their own financing and will lend to families directly. So there are 2 major financial aid applications you have to be thinking about and planning for. These go live in October, which is why we do this workshop now. So for any current senior, you have to fill these applications out next month, and you have to finish them by your student's first college deadline. There are a couple of you, I think on this call, I'm trying to remember, definitely last night, whose students have October 15th deadlines. This would be for like UNC Chapel Hill. The majority though are November 1st. So November 1st is the most common early deadline. You'd want to make sure to have the FAFSA and the CSS completed by then. So what are the FAFSA and the CSS? The FAFSA is the free application for federal student aid, and this is required to be considered for any federal aid and need-based institutional aid. And so if you're eligible for any demonstrated need, based on that FAFSA forecaster, and even if you don't think you are, but you may want loans, you've got to fill out the FAFSA. Sort of no ifs, ands, or buts about it. I would definitely say 98% of my families are filling out the FAFSA, unless they just really don't want to, share their personal information. They really don't need any money for college. The CSS profile is a secondary application that's required by about 400 colleges and scholarship programs. This is a secondary application that uses a slightly different formula called the institutional formula. The FAFSA uses a federal formula. And the CSS profile, if it's required by a school, it's usually in addition to the FAFSA. They want both. There are a couple of schools that have done away with the CSS and use a slightly different application. Or they'll, for some students who aren't citizens, and so they maybe can't do a FAFSA application because it's federal. They have a supplemental or a secondary application that's an institutional application. But for the majority of schools and for the majority of students, you're going to be filling out the FAFSA for sure, and for several colleges and universities, the CSS profile as well. So how do you know if a school requires the CSS profile? There's the CSS profile is governed by the College Board, like almost everything else, it seems. So they govern the SAT, the APs, and then the CSS profile. And so you can go to College Board CSS profile, and you can see a whole list of schools that require the CSS. Make sure you're looking at domestic students. Sometimes it's only required for international students. So domestic students required or not. And then they'll also tell you if a non-custodial parent form is required. And this is important, and this kind of makes some people want to pull out their hair. Let's say parents are separated, and maybe parent A is the primary caregiver, parent B is not involved, maybe at all. Some schools will still require that parent to fill out a financial aid application through the CSS profile. It's not an issue at all with the FAFSA. If you, in some cases, I've helped families actually apply for a waiver if parent B just really like can't be tracked down. In some cases that has happened. And so in that case, I can help you apply for a waiver with the university. But otherwise, if there's a yes here in this non-custodial parent column, the non-custodial parent, in the case of separation or divorce, has to complete a form. What else did I want to say about the CSS profile? Well, I'll get to more in a second here. So both applications are used to determine your EFC, your estimated family contribution, but each uses a slightly different formula. So one of the things so when you did the FAFSA forecaster, that was only using the federal formula, right? Because it's just looking at what your EFC would be on the FAFSA, based on the FAFSA. If you're curious to see what your EFC is based on both FAFSA and CSS, because you know your child has schools that are going to require the CSS profile, then I would direct you to the, again, College Board, bigfuture.collegeboard. And this is a great site, kind of a one-stop shop, but I especially love this Pay for College section. And you go down to tools and calculators. And the tools and calculators section has a bunch of different calculators, and including that loan calculator I was telling you about earlier, where you can kind of estimate what your repayment schedule would look like if you took out loans. But there's also an EFC calculator, if this thing ever loads. There's also an EFC calculator in which you can actually select institutional methodology and federal methodology, IM/FM for short. So that'll tell you what your EFC is, your estimated family contribution is, for both applications, you know, for schools that require both applications. Sorry about that, that's not loading at the moment, but that's where you find it. And it's called the EFC calculator. And that is, it's amazing. Sometimes I will see thousands of dollars difference between the FAFSA EFC and the CSS EFC, that federal methodology versus the institutional methodology. The FAFSA doesn't scrutinize as much. Mostly it's looking at income, and it's only looking at the income of the primary parent with whom the student lives the majority of the time. The CSS scrutinizes a lot more. However, schools that require the CSS profile typically have more money to award. So yes, they're scrutinizing, yes, they're asking more questions, but often those are schools that are awarding more need-based aid. Often those are schools that meet 100% of demonstrated need. And so it's often worth your while to spend that extra time doing it. So let me kind of show you here the difference between what's asked on the CSS and the FAFSA, because this comes up a lot. So the FAFSA is going to look at your income tax data, tax return data from 2 years prior. This is important, 2 years prior to when the student starts school. So for seniors currently, it's income information from 2020, because they're going to be starting college in the fall of 22. So you're going to be reporting data from your 2020 year. And the reason that's so helpful, and this changed a few years ago, is that if your student is applying early to a college or university, let's say they get a December offer, the current year's taxes aren't in yet, right? So, but going off of 2020, schools can actually make a financial aid award offer based on that and based on 2020. and you get an offer of admission and an offer of financial aid right away. And so that, and sometimes it's a little bit delayed, but basically, essentially that's what they're trying to do. So that's why it's 2 years prior. So that helps a lot. The CSS profile is also going to want past information, but they're going to want you to estimate the current year's data as well. So they'll ask you how much you believe you will earn by the end of 2021. And then you can go back and update it after you've actually at year's end. So that drives people crazy, especially business owners. And they're just like, I don't know. So you have to do your best, and you can always go back and adjust it. FAFSA is going to look at bank accounts, checking savings, educational savings accounts. If they're in the student's name, if they're in the parent's name, they get reported as parent assets. Income, taxes, exemptions, again, bank accounts, investment, real estate, but not including your primary home if it's the FAFSA, just investment real estate, and family business and farm. The CSS profile asks for all of that. Plus, they do want to know the equity in your family home, and that gets some people pulling out their hair also. So again, I have to reiterate here, they are asking for a lot, and it can feel a bit like an assault, but typically these are colleges that do have deeper pockets and more money to give. So they're going to want to know the equity in your family home, any trust fund information, medical spending accounts, any sibling assets that are held in the parent name, like a 529 for a younger sibling that's in the parent's name, siblings, private tuition, total retirement savings, and non-retirement annuities, and other valuables. This is actually really funny. They do want to know like like what are major valuables you have in your home, paintings or fur coats. It's sort of crazy. So that's the CSS profile. Now for both applications, again, you're going to fill these out next month. CSS profiles on College Board, FAFSA is on the student aid website, which I'll show you in a minute. 2 separate websites, and you need 2 separate accounts. You do have to list all the colleges that your son or daughter is applying to. So this is why I keep sending out those admissions plans with your students' updated college lists if you're a senior, because you do have to report that. Or you have to, list the colleges that you want this sent off to. For those of you who don't yet have high school seniors, I'm so glad you're looking at this now, again, because you need to be thinking about what your aid eligibility will be based on 2020 or 2021 if you've got a student starting college in 23. Right, so this year is what you're going to be reporting in for your high school junior, for example. Okay, questions about this slide here? Just the differences between the 2 applications. This isn't a bad, and again, you'll get this recording. This isn't a bad page to show like an accountant or a financial advisor to get your ducks in a row before you fill these forms out. For example, a lot of financial advisors like to talk to families before they fill out the FAFSA and the CSS to help you figure out, whose name some of these things should be in, ideally to maximize your eligibility for need-based aid. They might suggest that you keep the 529 in your name, or they might recommend you put things in your student's name. Typically, it's the opposite. Typically, you don't want a lot in a student's name because when colleges see that, they see it as a one-to-one. Every dollar in a student's name, like in a savings account, is sort of expected to go towards their college education, whereas for you, it's a percentage because you have a family to take care of and a household to run. So typically, dollars in the student's name are considered all available for college. So definitely talk to an accountant or a financial advisor about that, especially if you have a trust fund. That's a big one. I would definitely work that out right now and how that's going to be reported and who's a beneficiary of that account or that fund. So finally, we get to private scholarships. So we've covered federal, state, institutional, and private. So some private scholarships will ask you to fill out a FAFSA if there's need consideration. But often these are solely looking at merit, academic, or talent. And a lot of them are nationally competitive. And these are the ones I've been sending out to your students. The big Coca-Cola scholarship, for example, or the Coolidge scholarship. These are nationally competitive. Very, very few students are walking away with those national scholarships. But some students are really gung-ho about it and excited to apply for these scholarships, and they sort of make it a part-time job. And you really do need to make it a part-time job to yield anything for these nationally competitive ones. You know, you kind of have to get into a rhythm, and I'll give students tips on how to kind of be, you know, really efficient with filling out these applications, have everything ready, their resume, their sample essays, their letters of rec, and everything ready so they can just kind of plug and chug. So you do have to apply for a lot to get anything back. More likely is that your son or daughter will qualify for a local private scholarship. These are less competitive, but tend to be smaller. And, you know, $500, $1,000, $2,000. So you can check out local community foundations for scholarship applications that are unified, sort of like a joint scholarship application. And so wherever you live, you can look for the local community foundation of, and then your region. And oftentimes the private foundations will come together and agree on one unified scholarship that the student can fill out and qualify for smaller local scholarships that way. For looking at national scholarships, the College Board is a good one. That Big Future website we were just on, again, I told you, you'll kind of live there. There's a lot of stuff there. And then CAPEX is another good website for searching for scholarships. The scholarship search feature is pretty easy to use. It's important to note that bigger scholarships, especially the ones that are awarded or that are paid to the school directly, will get reported to the university. And that could affect the institutional aid package that your child receives. So, you know, because that's seen as now a new resource to pay for college. So, you know, I tell students if the award is given directly to the student, that's usually not a big deal, $500 to $1,000. But if the award is getting paid to the university, that gets reported, and that can affect the overall aid package from the school. So how do we find these schools that either award a lot of need aid if you're need eligible, or merit aid if you're not need eligible? And by the way, you know, a lot of families are looking at both. Maybe they've got moderate need eligibility, and they're very interested in having their student apply to schools that award merit aid. But if your EFC is low, I strongly suggest looking at schools that meet a high percentage of demonstrated need. And I'm going to show you a document that I like to use to determine that, and I can send it to you after the call. And these are usually schools, the schools that meet 100% of demonstrated need, for example, typically don't give much in the form of merit aid. There are a few exceptions, but typically if they offer a lot of need aid, they don't offer a ton of merit aid. This would be like the Ivy League schools, for example. If your EFC is high and you're not eligible for a lot of need aid, then you want to look at schools whose percent of merit aid is high. And I'll show you a really helpful spreadsheet that I like to use. Maybe some of you have already seen this. A colleague of mine, Jeff Levy, put this together, and he and his colleague, Jenny Kent, update this yearly. And it's super helpful because it basically shows you the percentage of, I'm sorry, that's the wrong one. That's regular decision, only decision. Hold on one second. I've got it right here. It shows you the percentage of need met versus merit. So how we use this is we find the school and we look at the average percent of need met. If that's 100, that's a school that meets 100% of demonstrated need. And you can see these are some of the most selective schools in the country. A school like Georgetown awards 100% of need and 0 merit. So that's what I'm talking about. Typically high need met is low merit. And so I like to be very honest with families whose students are applying to some very competitive schools, but may not be eligible for need aid. It's just important to be very upfront about this and to be comfortable with these sticker prices if you're not eligible for any financial need. Basically, then you're relying on private scholarships, which is sort of an uncertain game. Nothing's guaranteed there. When you see this over here in this far column, FM and IM, that means they use both the FAFSA and the CSS profile. They use both the federal methodology and the institutional methodology. And that's actually really helpful. As I was saying earlier, you might do that EFC calculator and determine that the FAFSA, based on the federal formula, you're getting a lot more, or you have a much higher need eligibility than with the CSS profile or vice versa. And so you can really narrow your search and just look at schools that maybe just use the federal methodology. Typically families who have a lot of assets but low income are much happier with the federal formula, which primarily is looking at, it weighs most heavily income. And so I've definitely seen families who could save thousands of dollars looking at schools that just use the FAFSA. But again, that's a personal thing, and I can help you sort that out. So this is a great document. I will email this directly to you since there's just a few of you on today's call. I'm just going to email this over afterwards, and you can kind of scroll and search here. So again, if a school, if you're not eligible for need, you'd want to be looking at these schools that meet a lot high or offer a high percent of merit aid. So that's this column here. Percent of non-need undergraduates receiving merit aid. So, and by the way, you have to kind of look at really this average merit award. That's the dollar amount that a typical student is receiving in merit aid. Okay, questions about that? That's also a figure you can find in when you're looking at a school's profile. In College Board, it'll tell you the percent of need met, and then the average merit award offered. So you can see that in each school's profile on the College Board website. So once you've sort of identified your estimated family contribution, I wonder if this, of course, this page is still loading, so I'm not sure if that will go. In the tools and calculators, back here in the tools and calculators section, you can then look at your net price, your out of pocket for each of the schools that your child's applying to. Yeah, sorry about that. Sometimes College Board doesn't do what I want it to. So the net price calculator will then tell you what your estimated out of pocket is at that particular school. Now, why I recommend those starting with that EFC calculator is because that just tells you a generally what would be expected of your family to pay and what your eligibility for need is. And once you've got a solid list of schools, then you can plug in your financials into a net price calculator for each individual school. By the way, you can also find the net price calculators in your students' College Planner Pro account. When they're looking at a school profile, there's a net price calculator button right there. So that might be the easier way for you to get to it, but it is available on the College Board website when it loads properly. So those net price calculators are fairly accurate when it comes to need-based aid, less accurate if you're trying to estimate merit aid. Occasionally, the net price calculators will ask for GPA and say, based on this reported GPA, you might qualify for this merit scholarship, but that is certainly not as accurate, not as predictable as need-based aid is. So you can probably gather from what I've been saying, merit scholarships are very subjective. They're not predictable, not black and white. And so certainly talk with me if you've got your student has their list of schools. And I've been trying to do this in our one-on-one meetings as well, sort of be very frank about, yeah, there's usually not any money coming from this school in the form of merit scholarships, or yeah, I think you would be eligible for merit scholarships at this school. If you want to review that with me, I'm happy to do that. I'm typically looking at historical data, past students with similar profiles as your student. I can kind of, accurately guess, do my best at giving you a guesstimate of what your student might qualify for in merit aid. But this is a really good time to sit down with that final list of schools that your student's been building over this past several months and really have a frank conversation about affordability. And is the list of schools diverse enough to help you sleep at night, where you've got a few schools on the list where you can afford the sticker price, or a few schools on the list where you're eligible for need-based aid because it's a formula and it's very upfront. And talk with me if you're not feeling comfortable about the list of schools. This is the time we need to modify it, because once you start filling out applications, and your students working on all their essays right now and filling out applications, you don't want to change a lot after that point. Now with the FAFSA and the CSS profile, as I mentioned, you do have to list the schools that they're applying to, and that's next month. And if you add new schools after that, you've got to remember to go back and add them to the applications. People forget to do that all the time. So any school you apply to has to be on the application if you're applying for financial aid. All right, so I just like to share some figures from last year. I'm always really proud of my students and how much they earn. Last year, my students earned over $2 million in scholarships. And when I worked with 30 seniors, And they received in total 39 scholarships. I think it was a little bit more than that because I wrote this before all the numbers were in. And the average scholarship amount was $70,000. The smallest was $10,000 and the largest was $155,200. This was a full tuition scholarship with some room and board left over. The average GPA of a student receiving an award was 3.8. And I had a student last year with who reported a 23 ACT score and had like a 3.4 GPA, I think. And they got four scholarships. So, I never want families to think there's no money available, but you've got to change the schools you're applying to. And I can help you identify those schools that maybe are less selective and give higher merit aid awards, and where there's sort of more generous discounting happening. We can also look at those WUI partner schools or regional partner schools where discounts are offered. And then also schools with just lower sticker prices. There was one full ride scholarship last year. And I like to be very clear about that full rides are very, very rare. They're even rare in athletics, honestly. More athletes actually get money from D3 schools who don't award athletic scholarships because they get academic awards from those schools. So I like to make sure and be, I kind of like to want to burst that bubble. And I know that sounds mean, that full ride scholarships are very rare. So it's a good idea to be smart about the list of schools your student is applying to, and make sure that you're comfortable with that, with your net price, and everyone is sort of in agreement about how much skin in the game the student's going to have, if loans are going to be taken out, et cetera. There are multiple half scholarships available. Several students get those. And, after the thrill of seeing all these scholarships come in, many families do still say this is above more than what we could afford. And that's why we want to make sure you've got options come spring. This is why I keep emphasizing having a range of schools, a range of cost, a range of selectivity, so that you've got options come spring. So I wanted to show you the College Board website, but it's frozen. But again, here is the website where you can do that FAFSA forecaster if you haven't done that yet. It's fafsa.ed.gov and /SPA/FAFSA4C right there. And I sent that out in an earlier broadcast email. So hopefully you've got that. And it takes you through several steps. And then you will get a final page like the one I showed you, my screenshot, that shows you that EFC number at the very bottom, that small print number. And if you need help identifying that or figuring out how to use that, please reach out to me again, because I know it can be a little bit confusing. The studentaid.gov website is where you can get a ton of information. This is where you get current interest rates on student and parent loans. You can get work study information here. You can actually print out a sample of the FAFSA. So if in advance you'd like to just sort of see what questions are on the FAFSA, again, maybe take that to an accountant or a financial planner and get your ducks in a row that way. This is also where you can find repayment options for loans if you want to start planning ahead and talking to your student, which I think is a great idea about what repayment would look like, and what the options are if they did borrow and take out money. So the technical FAFSA deadline is a long ways away from now, but I want to just stress that for current seniors, you do want to get this submitted before the first college deadline, before your student's first college deadline. And the same goes for that CSS profile. Again, the CSS profile is on the College Board website, and you can just go to the main College Board website and just type in CSS profile and you'll find it. And that's where, again, you find that list of schools that use the CSS, and you can actually create your account there in October. So I want to open it up for questions. I think that was all I wanted to kind of cover. Looks like I kept it under 50 minutes. So thanks so much for listening. And I hope I didn't go too fast or make anything more confusing than it needed to be. I'm going to stop the recording and then I'll stay on for questions.